Say hello to everybody. I am Babak Abbassadeh, the CEO of Toronto Centre. Welcome to Toronto Centre's panel on leveraging CBDCs or central bank digital currencies for promoting financial inclusion, which we are organizing as part of the Financial Inclusion Week and on the platform of the Center for Financial Inclusion. We applaud the Center for Financial Inclusion for their continued efforts in advancing this topic. Since our establishment in 1998, Toronto Centre has trained more than 28,000 financial supervisors from 190 countries and territories to build more stable, resilient, and inclusive financial systems. Our mission is sponsored by Global Affairs Canada, the Swedish CEDA, the IMF, and other valued international partners. And the World Bank Group was also the original founder of Toronto Centre. Financial stability and inclusion are sometimes viewed as separate goals, but they are interconnected because, according to the IMF, expanding access to credit without proper supervision can increase risks to financial stability. IMF goes on to assert that investing in high-quality supervision and promoting financial literacy can pay big dividends as financial inclusion expands. And that's why we care about this topic and is a staple of our long-term country risk-based supervision programs. And globally, financial inclusion efforts have gained momentum through technological advancements. However, challenges remain, including regulatory barriers, lack of financial literacy, cultural attitudes towards financial services, and of course, the elephant in the room, cyber risk. Promoting inclusion requires a multifaceted approach involving governments, financial supervisors, financial institutions, and others, fostering an inclusive ecosystem to empower individuals and drive sustainable economic development. Today, we're very grateful to have an excellent panel that is composed of financial regulatory supervisory experts and from related fields. They will discuss some of the latest advances in digital finance, especially how to leverage central bank digital currencies for promoting financial inclusion. And each one of them their organization is a partner of the work that we do. In some cases, we have trained them. In some cases, they are partners with us. So Natalie Hayes is the Deputy Governor, Bank of Jamaica. John Frost is the Head of Economics for the Americas, a Bank for International Settlement, BIS. Heo Seng Ren is the Lead Policy and Investment Official at the Consultative Group to Assist the Poor, or CGAP. This conversation is supposed to be moderated by our colleague Dong Hee, Deputy Director at the IMF, but he's having some connectivity issues. So I'm going to step in for a while now, subject you to my torture of moderating until he can come back. So it's I'm really pleased to have the speakers. Hello to all of you. Welcome to this panel. And your bios have already been distributed, so I'm not going to read them. So at this point, let me try to go back to the first questions. We have a couple of rounds, and we're going to start with, by the way, this is all cold, so I'm actually been thrown into this, so have some compassion and mercy, but we're going to make it very exciting. The first question is going to go to John. John, we're going to talk about broadly about financial inclusion in this round. Would you briefly explain what is CBDC, and also what should central banks' principal strategy be to build public confidence and trust in the future of CBDC? And you have 5 minutes for this. Thank you.
Thanks a lot, Babak. So let me just start by giving a formal definition so we're all on the same page. So the BIS often defines CBDCs as a form of digital money denominated in the national unit of account, which is a direct liability of the central bank. And so CBDCs are a type of central bank money, similar to cash, bills and coins, but of course in digital form. And for the consumer, they look a lot like a bank deposit or e-money, with the difference being that they're holding a liability of the central bank rather than a liability of a private bank or a private financial institution. So, there can be a lot of benefits of issuing CBDCs. Today, we'll be talking in particular about some of the benefits for financial inclusion. Some of the other benefits that central banks are targeting might relate to payments system efficiency, or to safety and resilience, or even financial stability. But you mentioned in your question, how can public confidence and trust in the future CBDC be built. And I think that is really essential. Of course, in everything that central banks do, public confidence and trust are essential. We need, to ensure, as part of fulfilling public mandate, that we contribute to price stability, contribute to a stable value of the national currency, and these things can't be taken for granted. Generally, in most countries, the public does trust central banks as guardians of the national currency, as guardians of the stability of the financial system. Central banks have taken great strides in the last decades in achieving that, but we all know that trust takes long to build and it can be lost very quickly. Where central banks would fail in that mandate, of course, trust can evaporate. So I think that central banks do have a very good case for issuing CBDCs. The case differs by country. Each country has its own unique features. The monetary system in some countries, has issues around competition and efficiency. In other cases, it has issues around access. But I think that issuing CBDCs is very much in line with the mandates that central banks have for payment system efficiency, for financial stability, and in many cases for financial inclusion. And just like with other central bank operated infrastructures, like with fast payment systems, like with RTGS systems, central banks are issuing CBDCs in line or exploring CBDCs in line with their specific mandates. And I think that there are a lot of measures that we can talk about. I think Natalie will be able to talk later about some of the things they're actually doing in practice in Jamaica. I think Hao Song can talk about some of the things that are being discussed across different jurisdictions. But I think that there are good practices. In general, I think, though, central banks have to communicate very clearly what are the issues that they're trying to address with CBDC. Is it primarily financial inclusion? Is it primarily the high cost of payments? Is it primarily offering new functionalities to end users? And I think that they just have to be very consistent in communicating the goals of the project and in making sure that they deliver on what they promise. And with those conditions fulfilled, I think that they do have a very strong basis to contribute to trust in the monetary and financial system.
Well, John, thank you very much for that comprehensive answer. And you did it all in 3 minutes. So you really get the gold medal in the first round, setting a very high bar for Natalie and Hei Song for concise answers. I'm very happy to see our colleague Dong Hee from the IMF. And as I mentioned, IMF is a partner of Toronto Centre. And I was just warming the bench for you, Dong. Are you ready to take over at this point?
Can you hear me?
Yes, yes.
You don't see me, right? Can you?
We can see you and we can hear you. Yeah.
I see. Thank you very much. I'm so sorry for the technical difficulties.
No worries. So are you comfortable? Would you like me to run one more question and then you take on the third one? Would you like to just
No, I can take it over from here if you like.
Okay. So this question, we're in the first round now. We finished John answered his question. Now we're on Hei Song's question. So if you would like to start that one, how could CBDC improve financial inclusion? So if you want to take it from there, I'd like to say thank you, namaste, and I will disappear. Thank you.
Thank you so much, Babak. I'm so sorry again for this technical difficulties, but I was really looking forward to this conversation and to see, of course, John and Hao Song and Deputy Governor Natalie on the call. I think this subject, of course, has been under a lot of discussion. So let's go straight to Hao Song. And how do you see CBDC can help financial inclusion? What's special about CBDC that could be different from other digital means of payments? We would really like to hear from you. Thank you, Hao Song.
Thank you, Dong. It's great to see you. Let me twist the question a little bit. So in 2021, a colleague of mine at the CGAP published a blog titled, "Is Financial Inclusion a Reason to Push CBDCs?" The reason being, CBDC, especially retail CBDC, is being cited as a way to promote financial inclusion. So basically, we asked a question, what CBDC could do that the current forms of e-money cannot, right? In terms of access, efficiency, and costs. And then the other side of the same question is, what the challenges we've seen with the current form of e-money that the policymakers could also consider, right, in terms of considering CBDC. And now, fast forward to last week, we had our whole policy team retreat where we had a discussion on the latest BIS working paper, Finternet, by Carstens and Nilikani, where we see, the promise of the recent technology advances, especially blockchain and the tokenization, and where the tokenized money is discussed as an essential element of that grand vision, right? So it's a very convincing vision. So we asked ourselves, have our view changed since the blog we published 3 years ago? Now, let me try to explain, I would say it's a more nuanced view, looking at the policy objectives, as John mentioned, right? Exactly what the policymakers want to address, what problems we want to solve with CBDC, and also taking into consideration the existing payment landscape, right? Existing infrastructure, instrument, market players, market dynamics, etc., right? So the first question to ask is, can especially retail, can retail CBDC be widely accessible without an account? Right, we're talking about, the more recent experiment. I think Natalie will come in later as well, seeing more, especially in promoting financial inclusion, looking at the retail CBDC. We are looking at more convergence to a two-tier system, where you still have financial service providers and the other players in the market serving as financial intermediaries. So basically the question is, what financial service providers and intermediaries will be able to open wallet, and what kind of onboarding requirement, including ID and KYC requirement, that would apply. And the second question is, can retail CBDC be widely distributed and accessible and also accepted, right, for different use cases? And here, if you look at the latest, the state of the industry on mobile money report by GSMA, and very interestingly, you will see 5% of mobile money in circulation is used for retail payments, compared to 40% in cash in and cash out transaction, which basically tell us, there's still quite a pervasive preference for cash, especially for retail transactions, right? So that's also another area to consider in terms of acceptance. There's various players, including economic incentives and the business model for these players as well. And then the last question is, would retail CBDC be cheaper as a new instrument, right? Where does it fit in? And of course, it's John mentioned that there's a public infrastructure aspect, which is very valid, could be provided relatively cheaply, but it doesn't mean there's no development and maintenance cost. And then I mentioned that there's various financial intermediaries as well. What are the economic incentives and business model for them? And then lastly is existing infrastructure and the market players, right? There's various cost structures involved there. And also competition, both public sector and the private sector side. So there's a lot of policy issues at play, and also market dynamics. So with that, I'll leave it there. I know Natalie will talk a lot about the potentials of CBDC that could be explored, right? And some of their experience. I could come back to that later as well. Thank you.
Thank you, Haotong. So let's go to Deputy Governor Natalie Haynes. Jamaica, of course, is one of the 3 countries I think we have seen live CBDC. You introduced the JAM-DEX about 2 years ago. And how has been your experience? And particularly thinking about, from a financial inclusion point of view, how do you ensure that CBDC is designed in such a way that it's appealing to financially excluded population. If financial inclusion is the policy objective, how do we make CBDC appealing to them? So what are the measures you have taken, for example, to ensure access by the financially excluded? We look forward to hearing your thoughts. Thank you.
Okay, thank you, Don. And well, it's afternoon here in Jamaica. Good afternoon, listeners and viewers, and of course to my fellow panelists. All right, so one of the objectives of implementing JAMDEX, I'm going to be using that word, JAMDEX in Jamaica, was financial inclusion. We have other objectives, I mean, as part of efficiency in payment systems via interoperability, the cost of cash, handling of cash, and of course, as part of the government's digital transformation in terms of the entire economy. That was our contribution. So I'm just going to focus now on the financial inclusion aspect. All right. Just to give you some statistics, so it's very quickly, 70% of the population in Jamaica is banked. So we're looking at that 30% that is unbanked. And then another statistics, in Jamaica, 113% is our mobile penetration. So even if you don't have a bank account, persons in Jamaica have one, some have two, some have three mobile phones. And these are smartphones. Yeah? All right, so with that statistic in mind, how do we get access to the unbanked and the vulnerable? We widen the scope of entities, financial entities that could be wallet providers by providing wallets to individuals. So it was a mix of wholesale and retail. So we had our usual commercial banks, but we had another category, payment service providers. And these are entities that are testing payment products in our regulatory sandbox. So they are eligible to distribute JAMDEX on behalf of the central bank. So we figure persons who don't have bank accounts could get access to JAMDEX through these payment service providers. So you don't need a bank account to have JAMDEX. We see the JAMDEX as a low KYC product because we are always cognizant of the AML safety implications in whatever we do. So amendments to our AML legislation allowed for such products to exist, low KYC information as opposed to a standardized or enhanced. And therefore, persons now could access this through not only banks, but other payment service providers. They have the cell phones and government supported by having and free Wi-Fi access across the country. I think in terms of that penetration, we are close to full island-wide coverage. And of course, we tested it. There was a use case about 2 years ago. We have what we call a Christmas work program where persons are employed to actually do Christmas cleanup on the streets. And we tested by paying these persons in JAMDEX. So the amount we paid out at that time was equivalent to about $5,000 US. And those persons were able to use JAMDEX at their micro and small merchants in their community. So we saw that as a success use case. Thank you.
Thank you very much. That's very informative. Maybe we can start a second round of conversation. Let me go back to John, and we'll come back to you, Natalie, a bit later. So, John, I think in terms of we have been talking about policy objectives, and that's of course extremely important when we think about making investments in the complex project like CBDC. So what are the other sort of implementation challenges you see from the BIS research, from the experiments we have seen across central banks? Some of the implementation challenges, of course, we talked about the two-tier operating model. How do we incentivize the distribution of CBDC? How do we, encourage onboarding of merchants and consumers? We know that in payments, of course, we have two-sided markets. Consumers would not probably be willing to use CBDC unless merchants accept them. And the other way around, merchants would be incentivized to accept CBDC if the consumers are willing to use them. So this sort of chicken egg problem, that's an important typically an important issue we have to deal with in implementing new payment schemes. So in your view, what are the special, challenges in CBDC that we, policymakers have to really focus their attention on, particularly from a financial, inclusion perspective? Thank you.
Right. Thanks, Dong, and absolutely. So, as Dong mentioned, I mean, we've done research on this at the BIS. We have a piece that's together actually with World Bank colleagues, including the author of the blog that Hao-Tsang had mentioned earlier, about CBDCs and financial inclusion. So whether CBDCs are a new tool in the financial inclusion toolkit, I'd be happy to share the link to that in the chat. We talk there about the specific opportunities, the barriers to financial inclusion that CBDCs could help address. And that includes things like, high cost of payments in some jurisdictions, or the relatively onerous KYC requirements. And of course, we make the case that CBDCs offer opportunities, a new tool to try to address some of these specific barriers, which do differ quite a bit across jurisdictions. But as Natalie mentioned, I mean, there are a lot of countries where mobile usage is much higher than bank account access. And so there are real opportunities there and means for having tiered KYC, for having much lower cost access that can be especially helpful in very remote areas, on islands, or in rural parts of different jurisdictions. And so we show that there are specific design features of CBDCs that really can help to address some of these specific barriers, which again depend very much on the country. But I mean, Dong's question also made very clear that there are challenges, there are operational risks, there are things that arise from the distribution, security, and redemption of a CBDC across the banking system. There are things that relate to adoption and incentives for adoption, and so all of those matter as well. And I wanted to point to one other piece of research that we've done, and this is actually cooperative activities between different central banks across the Americas region. We've looked specifically at CBDC information security and operational risks. So there's a report that was published in November 2023, and please feel free to check it out on our website. Again, I'll share the link to that. And the report notes that CBDCs can have very far-reaching implications also for the operations of the issuing central banks and the risks that they face. And those depend on a number of things, again, on the specific design adopted, on a range of internal and external factors to the central bank. But the report proposes an integrated risk management framework that can be applied to the entire life cycle of a CBDC, from the research and design stages to implementation and operation. It discusses the implications of many of the specific design choices the central bank needs to take, and suggests some tools and processes to identify and mitigate the risks that CBDC poses to the issuing institution. So just to give one very specific example, a lot of central banks worry about information security, and they worry about the risk that this kind of sensitive transaction data that is being collected as part of offering CBDC services could be leaked and could be used against users. And so there are different approaches to managing that, but I think one approach that's very promising, taken in the Bahamas and I believe also in Jamaica, is just separating identity information from transaction information. So that way, if there were a data breach, there's a minimization of the amount of data that could be accessed. And so I think some of these approaches can be really promising, and they can help to better manage the risks and make sure that the CBDCs serve their goals, that consumer trust is maintained, ensuring that along each step of the chain in CBDC transactions, the system is performing as it should. Maybe just to make one point here, I think that a lot of the risks we really only know about because of practical experience. So we know with payment systems that things can go wrong in general, but there are things that are maybe different about CBDCs, and the only way that we can really find out about this is by seeing that in practice. Likewise, the risk management practices really have to be tested in practice. And so I think that in that light, the work that's being done in Jamaica, in the Bahamas, in the Eastern Caribbean, in China and Nigeria is really helpful. I mean, these central banks are really pioneering the work in this area, helping to gain insights that are helpful not only for their own central bank, but also for other central banks. And so I think that there's a lot of value in learning from their experiences and seeing what can be replicated elsewhere. So I'll stop there and give back to you, Dom.
Thank you, John. I think, of course, you talked about some specific design features that are conducive to financial inclusion that have to be carefully thought through. Maybe let me move on. Let me turn to Hao Tung. I think in terms of the broader sort of decision-making process, or how do you think central banks should really approach the decision on CBDC, and what design and governance features do they need to consider if financial inclusion is a key policy objective?
Well, let me build on what John already said. I think in terms of the decision-making process, there's several layers. The first is policy objectives we already discussed. The second is legal and the regulatory considerations, right? What is the legal status of CBDC and whether the central bank will have the authority and the mandate, et cetera, usually require legislative changes. And then there's other design features and governance issues, and also including the mitigation of risks. And of course, CBDC, I go on for quite long in the previous round about what are the current constraints that the CBDC might also face. But the CBDC does also offer a lot of potentials, right? Being central bank money has the settlement of finality instantly and securely, and we also have a programmability with use of smart contracts, facilitating the automatic execution of different use cases, right, from G2B, G2P, B2B, etc. And there's also offline capability we could explore when we discuss, in particular, financial inclusion, hard to reach area with constraints on digital connectivity. And in many countries, even the reliable access to electricity is a problem, right? So there's many features and the interoperability, of course, by design, right? Going beyond the constraints of private networks. So there's a lot of potential that could be explored. And then Jean already mentioned the operational risk, including cybersecurity. There's integrity risks and also data protection and the privacy risk. We can come back a little bit later on those technical issues. But I think let me share a few thoughts in terms of how could the CBDC design facilitate the financial inclusion objective in particular. As already mentioned, we want to have easy access, right? We want to be, whether is this onboarding process to be, with tiered customer due diligence and easy to access for the users. And then we also want to have this the second tier, right? Basically, we're looking at a large network of financial service providers and the agent network to facilitate the onboarding, including the merchants, etc., and reaching the last mile users. There's also the interoperability issues, because we'll be living in a reality where you will have different instruments, cash, existing e-money instruments, and retail CBDC for a while in many of the countries, including those countries with already live launch. So that interoperability within the existing system is quite important as well. And I mentioned the offline capability, and of course it's by design, facilitated by certain technical features. We can also go into a little bit of detail later. And the last is a balancing integrity and the privacy data protection concerns. Here, and of course there's a different technology advancement and also different design options, alternatively we could explore, right? Like a limited anonymity, and then whether there's a certain threshold. There's also new technology in terms of privacy enhancement, right, such as blind signatures, and there's various other technology available. The last point I want to raise is really important from the experience. It's critical to have private and public consultation early on, which we really talking about the distribution and adoption and acceptance, right? So it's critical for policymakers to have that consultation early on, and looking at the existing market landscape, including existing providers, service providers, and the e-money service providers, and what are their business model, business viability, and economic incentives, right? I think this is a really critical aspect in terms of the ultimate success if we want to enhance financial inclusion impact. So I'll stop here. Over to you, Dong.
Thank you, Haotong. I'm sure we'll get back to you later to maybe discuss some of the points a little further. But let me turn to Deputy Governor Natalie again. So Natalie, for many central banks, resource constraints are, of course, an important factor in considering, how much investigation they should do into CBDC, and what, over time, how do they manage various resource and capacity constraints. It's not only in terms of the initial fixed cost of setting up the systems, but also the operational, recurrent costs. So in your experience, you launched JAMDEX 2 years ago. How have you sort of considered the various resource costs involved? Before you launched it, of course, you did a lot of investigation, research, and then after launch, how do you think about these resource costs? And maybe I think that sort of experience would be very helpful for other central banks when they consider when and how to launch CBDC. Perhaps you can share some thoughts on these issues.
Okay. All right. Thanks again. All right. So resources, I'm going to look at it from human resources and financial resources from those aspects. On the human side, what we did in terms of ensuring the success of our launch and the continuation of that success, we had a dedicated team that we pulled from across all areas of the bank. And there was a proper governance structure looking at the implementation of CBDC in Jamaica. So it came straight from the top. The imprimatur came straight from our Minister of Finance. The governor sits on an oversight committee along with me and our senior deputy governor and our legal person and our chief information officer. Then it moves on to a steering committee in terms of that, and that drills down to a technical committee, which actually takes all the policy decisions and implement. So, and a team of dedicated staff working on the technical aspects. They had no other responsibilities except looking at CBDC. So that was what contributed to the success in terms of launching so very quickly from the embryonic stage to when we had our pilot. So that's on the human side, and we still continue to have dedicated human resources to that. On the financial side now, it's a little more tricky because initially when we launched JAMDEX, it was to be a replacement for cash. So the cost involved in terms of that, in terms of Bank of Jamaica funding the hardware for the whole currency management process, to mint, to issue, redeem, and destroy if necessary. The cost for that hardware and then the monthly maintenance to the technology provider over time, that would have been a cost that we had. However, JAMDEX has morphed significantly since we started. And one advice I would give to central banks is to be very agile in knowing how to pivot around the changing demands. You will not stick to your original script. You cannot, because it's going to be changing on you, and you have to pivot around those changes. So initially, a replacement of cash because of the high cost of cash. And so the main payment method we saw was the P2P using using the cell phone. However, it has morphed now into going for our larger merchants in Jamaica. They would prefer not to use the phone and actually have Jamdex run through their point of sale systems. So what did we have to do? We had to actually invite a technology provider to test in the sandbox to develop a solution to use Jamdex at point of sale machines. So we funded that. So that had to be funded by the central bank. The next thing was the government said to us, hey, we want Jamdex as a major payment for online tax transactions. And we are currently testing that. So we have had to fund the configuration and whatever goes along with getting that online for the government. So it has morphed beyond just a phone-to-phone to another significant retail means of payment. Another issue was the banks, mainly the cost. Although we had given them ample notice, most of them could not justify those costs to the shareholders, boards, and so forth, because these are private entities. So we have embarked now on a cost sharing with the wallet providers. So the bank expects to cover whatever hardware is required, while these entities would actually, they would fund whatever distribution of Jamdex throughout Jamaica. They would fund that. And then, of course, you will have to share the cost of retrofitting the point of sale machines to accept Jamdex. And most important, marketing and communication, which will lead to adaptability. So central bank is very integral in that. I mean, I've seen myself and my staff become communication experts, marketing experts. that's not our forte, but we have had to pivot to ensure the success of Jamdex in meeting the ever-changing needs. So that's it.
Thank you, Natalie. That's extremely insightful. Thank you for sharing these lessons. I think, I mean, one takeaway for me is that, you know, cash itself is quite expensive.
It is.
And over time, hopefully, when CBDC scales up, when adoption becomes higher, certainly, you know, the overall cost of, you know, supplying this means of payment to the public will actually become lower for the central banks in the longer term. But in the short term, that may not necessarily happen. So, you know, that there will be some financial implications there. The other thing is that you also mentioned that CBDC is really something new, a new experience for central banks. This is really like to make a product that's attractive. And central banks, of course, typically think more from a policy point of view. So making a product attractive to the ordinary citizens, that's a totally new experience. And there is quite a lot of there are a lot of new challenges here. So that's very interesting to hear. I think these are very valuable lessons for other central banks. So at this point, I think let's open up the floor and for audiences to post the questions. I will be happy to pick some of them for the panelists to answer. I'm not sure how I will get the questions, though, technically speaking.
Well, I see a question for me down in the chat.
Okay, please go ahead.
Yes, so I'm going to read it. I think, I'm not sure. Oh, Marcel, right. So the question is, among assuring user privacy, scalability, interoperability, and adoption, which one would you point as the biggest challenge? And I think the biggest challenge for me is adoption, not just by consumers, but by all the banks coming on board so that you can have a more wide-scale adoption. Currently, out of a total 10 to 14 entities that are eligible to distribute, we only have one fully and 3 others are still finalizing their wallets. So, and one of the largest commercial banks is not yet on board. So you understand the level of adoption that would come if all banks are not on board. So I think that's our biggest problem, and that's why we have had to now move into the mode for cost sharing to see how we can move them along.
Thank you, Natalie. Actually, I mean, recently, as some of you know, that the IMF, we have a CBDC virtual handbook. We have 11 chapters that have been prepared, and some of them will be formally launched as chapters just during the annual meetings next week. And one chapter actually deals with adoption. So I think some of these issues are discussed in length by that fintech note. It's called inclusive strategy to encourage or to manage CBDC adoption. That requires quite a lot of efforts on. It's not only education, marketing, but also regulatory considerations, incentives for service providers. So all these issues are also discussed there. So what you have just shared, Natalie, is really very important. Any other questions from the audience? While we wait for the questions, maybe John, can I come back to you? I know you have been doing a lot of work with your colleagues at the BIS on thinking about in the digital age, how do we make use of the digital trail or the data we collected for credit scoring or financial inclusion purpose, in the sense that financial inclusion is not only about payments. Of course, we hope that new payment instruments like CBDC, when they are very attractive for those financially excluded population to use, that would provide a gateway for them to enter the formal financial system. For example, if we start having some observations of their payment behavior, that in itself, that information is very valuable for the service providers, right? Because being a good citizen, paying on time, and all this would actually give you some information about the credit worthiness of potential borrowers. So maybe you can help from this point of view. How would the CBDC play a role, according to this line of research?
Yeah, absolutely. I think that it is really important to emphasize that financial inclusion is about more than just payments. I think there are many cases where we do need to give more people access to digital payments, and that can be a large share of the population that lacks that. But even beyond payments, you want people to have access to credit, to insurance, to savings and wealth management products. And so all of those things are important, and there are, I think, possibilities, there are opportunities for CBDCs to support in those areas as well. So we've been talking with a lot of central banks about their perspective in this area. You mentioned a very important one, Dong, which is that the transactions data that are generated from a CBDC wallet can be very useful, for instance, for accessing credit. So for consumers, certainly, but also for businesses, if they have this digital data trail that they can show, they have a history of a stable income, of paying their rent or other costs on time, those can be things that show that an individual or a firm is creditworthy and can ideally help them to access low-cost credit that they can then use for productive investment. Very important, though, is that if we want to go down that route, the user should be in control of that data. So it should really be the user having access to their data trail through their CBDC wallet, and then being able to go to credit providers and say, I want to share my data with you so that I can get an offer on credit. They shouldn't have to share that data if they don't want to. It really should be something that's at the behest of the individual user. And I think that that can be done very, very well through CBDCs. It can also be done through open banking or through other means. But I think CBDCs allow some of these things to be built from the outset and to give users control over their data from the outset, which could be really powerful. And I think central banks are in a very good position to design systems in this way, because central banks in the end are serving the public. They have a public mandate. They're not commercially interested. The central bank doesn't want to harvest or sell the data. The central bank has no commercial interest in this. And so I think that central banks are able to credibly build systems that maybe the private sector would not necessarily have the incentive to build. Beyond that, I think there is a discussion now with tokenization, with programmability features of CBDCs. This can apply either to retail or even to wholesale central bank digital currencies. So I know, for instance, in Brazil, that the central bank is designing a wholesale CBDC that should support retail services. And there it's very clear that some of these programmability functions, some of these new functionalities that the wholesale CBDC could offer would make certain processes much more efficient. So that could mean much cheaper credit for small businesses. That could mean much more efficient insurance claims. And so the Central Bank of Brazil has said very clearly that their wholesale CBDC, Drex, the digital real, really intends to promote financial inclusion beyond payments. They have their very successful domestic fast payment system, PIX, which is supporting financial inclusion in payments, but Drex can help to achieve better financial inclusion in other areas. And so I think that's a very valuable experience. I'm sure that in Jamaica there's also some thinking about how the Jamdex might be able to support other financial inclusion in other areas. And I think that this is very much a new area where there are lots of opportunities, but a lot of further research and further experimentation to be done to see how this can work in practice.
Thank you, John. That's a very important point. Also in the fund, one of the handbook chapters, we are focusing on CBDC data use and privacy protection. So how do we strike a balance between trying to realize the economic value of the data, but also accord a high degree of privacy protection? I think there are various means of doing that. Rigorous institutional requirements, of course, are important. But also there are technological means, in the sense that the privacy enhancing techniques can also be made use of in designing CBDCs. So some of these considerations are being very actively investigated. So I don't know whether there's any other written question posted.
See one just come in.
Yes, there's one. How best can central banks handle disintermediation risk that can arise?
That's a very another hot topic. Any thoughts from the panelists?
Yeah, so I can go ahead as it relates to us. I mean, Jamaica is our monetary policy objectives. We are in an inflation targeting framework. That's what we do in terms of our monetary policy objectives. And so to avoid disintermediation through the normal channels, that's why we use commercial banks in terms of distributing cash. So it's CBDC mirrors what we do with physical cash, that we only issue physical cash to commercial banks and then they issue to the public. So the same thing basically with CBDCs. As I said, we had other payment service providers, but those are few and those are regulated. So we have access to that data in terms of aggregate data that is out there to access actually the transmission mechanism through when we move interest rates, how that feeds into inflation. So the people that are distributing CBDCs are already under the regulation of the central bank.
Any additional thoughts from?
Right. I would advise the central bank to avoid this, not for the central bank not to issue retail from it, where the central bank actually is issuing the wallets. That is going to create a myriad of problems. And we looked at that and decided that that was not the route to go, not only from a financial intermediation perspective, but from an AML safety perspective, and looking at the risk profile of the central bank.
Any additional thoughts, maybe from Hao Cong?
Yeah, I think Natalie already mentioned it's basically following the two-tier, which is many central banks are employing in the retail CBDC space. And then there's of course limits, right? Limits in terms of holding, limits in terms of conversion from deposits to holding of retail CBDC, and there's a various. I think in this topic now it seems it's becoming much more clear from the policy and the risk perspectives. There has been some distillation of lessons, and of course, in terms of whether retail CBDC will be interest bearing or not, how to set that remuneration on retail CBDCs, etc.
Right.
So I will stop here. Thank you.
Thank you, Hao-Tung. I think, of course, this is an important consideration. Just to also point out that, of course, some competitive pressure in some banking systems is actually not a bad thing, right? So we know some banking systems can benefit from a little higher competition from an outside solution like CBDC. So that's not necessarily, we cannot say that's not necessarily bad for financial stability. I think it depends on the initial conditions of the banking system as well. I don't know whether, John, you have any additional thoughts on this.
Absolutely. So I think that I agree absolutely with what Natalie and Hao-Tung had mentioned just now. But I think another point that often comes up is the risk of digital runs. So not only structurally, whether there will be a disintermediation of the banking system and reduction in the available funds for lending in the economy, but also whether this will happen suddenly during periods of stress. And I think here, we already have the case that in many jurisdictions you can move deposits out of a bank at the click of a button. You can use your smartphone. You can say, I don't trust my bank anymore. I want my funds out now. And so I think that the potential for runs to happen very fast already is there. You can move funds between banks. You can move them to an e-money provider. And so I don't think that that's necessarily something that's different for CBDCs. And I would also argue that, if a bank is unsound, it shouldn't be our role as the public sector to force people to keep their money in bad banks. We are central banks and regulators are guardians of the stability of the financial system. It's important to make sure that banks fulfill minimum capital and liquidity standards. And having this outside option there, you could even argue that that's constructive because it makes banks invest more in risk management and make sure that these things don't happen. But I don't think that there's a very large difference between having a CBDC versus having fast payment systems, having electronic payments like we have today. I think in both those cases, if you have a bank that's not sound, that loses the trust of its clients, people are going to run. And I think that that shouldn't be a reason not to advance with innovation in the financial system.
Thank you, John, for these additional thoughts. I'm not sure whether there is any additional question posted here. Do you see?
No, I'm not sure. No. Okay,
so maybe let me come to Hao-Tung. I think one issue that has been very much on the mind of central banks and, of course, citizens in general, that is, how do we think about the issue of privacy protection in CBDC use? We mentioned earlier that data itself, it can be valuable. It can be valuable for financial inclusion purposes. But when we come to payments, many countries, not every country, I think there is a different degree of social preferences for the degree of privacy protection in different countries. How much anonymity we should have in payments, how much you want to disclose some of this data for potential credit providers. So how do you think we can strike a balance between privacy protection on the one hand, but also to ensure integrity? We need to ensure that CBDC will not be used for money laundering and terrorist financing purposes, and maybe abused by bad lenders. Those consumer protection issues. So how do we strike a balance there? Maybe you can share some thoughts.
Sure. I think many central banks are grappling with, in particular on this issue. I think that's one of the most difficult challenges facing policy makers. And first of all, I think we all agree, especially in this forum within the regulatory circle, that a fully anonymous like a token-based, fully decentralized is probably not the way to go. As you said, that there's many risks involved, obviously, with integrity and other issues. And then the CBDC by design, as I think John and Natalie also mentioned earlier, you could separate the identity information from the transaction itself. So there's could be solutions separating what is visible to the central bank in terms of the transaction details and the verification, etc. And then there's also the account information sitting with the financial service providers, right? Talking about the integrity risk, how to do the customer due diligence. And as I earlier mentioned, there's also technology, right? The privacy enhancing technology. For example, the ECB is looking at blind signatures in particular, and the BIS Innovation Hub also looking at other features like zero knowledge proofs. There's a different experiment. So that also offers some possibility. And then, of course, in terms of regulatory principle, we keep emphasizing there need to be tiered KYC requirement, and it gives. So, when I say fully anonymous, my colleagues actually correct me, right? It's not possible if it's a digital being fully. There's a certain traceability, right? But by design, you can separate to have a certain, let's say, pseudonymous transactions by separating the transaction detail with the ownership and identity information. So I'll stop here. Thank you.
Thank you, Haotung. I think we are fast approaching the end of the allocated time. Maybe let me ask each panelist maybe to share, one thought in less than 1 minute. What's the takeaway you would want to leave the audience? Leave to the audience. Maybe John first.
Sure, thanks. So I think this has been a very useful discussion, and the one thing that I would leave with the audience is that I think this is a field where we really need evidence and we really need examples from practice. And so in that light, I know that there is great research being done at the moment, and this is a great area for researchers also to be very active and to tell the stories, to gather data, to gather evidence on what's happening in practice. And I think that we can really learn a lot from those jurisdictions that have decided to embark on a pilot or even launch a CBDC. So I think there will be a lot more to be learned from this, and I expect that we'll have a lot further insights in the coming year, the coming 2 years, as these projects progress further.
Thank you, John. Haotung, any main takeaway you want to leave?
Sure. I think if we really extend our horizon to look at the vision as laid out in Finternet, if we can do everything on chain with tokenized money, tokenized assets, and of course it's secure, it's efficient, and in terms of a cost reduction as well. But I think in reality, especially looking at the specific countries, are in many of our developing client countries, there's a policy objective that need to be looked at very carefully. What the problems we will want to the CBDC to address specifically, and what are the existing landscape. As I said, there's going to be in the foreseeable future a mixed reality of cash, existing format of e-money and the CBDCs. I will leave it there.
Thank you.
Thank you.
Deputy Governor Natalie Hayes.
Thank you. All right, so I'm giving advice here. So there's no one size fits all in terms of implementing CBDC. I encourage persons to look at their whole ecosystem in terms of penetration, digital penetration, banked versus unbanked, all of those. What are your objectives that you want to achieve? You may have one, you may have more than one, and is the CBDC design that you're implementing going to achieve that objective? So you have to, it may sound a little redundant, but think about it. You can achieve those objectives in some other way. And the other one is at the get-go, identify and engage all stakeholders to ensure everyone that you require for the success and adoption of CBDC, that they are on board. And of course, have a good governance framework for implementation.
Right. Thank you very much. I have, maybe a little bit of a takeaway myself. I think financial inclusion is important, but it's hard. It's a tough nut to crack, and anything we can do, we should try. I think CBDC does provide an opportunity for us to have a financially excluded population to use digital payments, because the central banks are in a way to design CBDCs specifically for financial inclusion purpose. I think that's a very rare opportunity that we should seize upon. Having said that, it's a big challenge. I think once we have, we have this idea how to implement that requires a lot of effort to design the incentive mechanisms to encourage both consumers and the merchants to join into the ecosystem, to incentivize intermediaries, and of course to manage the macro financial implications of CBDC itself. So that's a huge endeavor, but I think it's a good opportunity we should take advantage of. And once these unbanked population are in the payment system, then other products can be developed on top of that. I think that's really an exciting journey, I think, ahead of us. So with that, let me conclude and by thanking the Toronto Centre for organizing this conversation, of course, the Centre for Financial Inclusion for hosting this platform. Thank you very much for joining us. I hope you have enjoyed the conversation. Thank you.